going on, everyone? So today we have a topic today that is very, very important to anybody out there who is trying to buy altcoins, meme coins, all of that. We're going to be talking about whether or not we are going through an altcoin season right now. Is this altcoin season? Are we going to continue to see these stupid gains throughout every single project? Is it going to continue to go on like this for months? We're going to talk about this. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into this. So as you can see over here, we are literally going crazy on all the projects here. You can see the top gainers here on CoinGecko. We have 258% Commonwealth, B3 Base 78%, Nylon 59%, Xsphere 51%, Dogs 47%, even Siren, the pump and dump scheme, is 27%. And then if you look over here at Bitcoin is also pretty much pushing 80K. It's back down to 79K. And we have all these on the crypto bubble. Zcash has been doing extremely dumb numbers. Like Zcash has been going crazy. And I was telling you guys about this. And Zcash continued to go up from when I talked about it. And I think it's also might actually push up to this resistance that I mentioned at 690. We'll see if it does that. But does this mean that we're in altcoin season? Just because Zcash is going up, everything else is going up. You know, we've seen Asteroid Shiba doing big numbers. We've seen B3 Base do these huge numbers. We've seen USD, we've seen that project do some pretty big numbers. We've seen a lot of projects do big numbers, but we're also seeing these big pullbacks like this after all of those pushes. We've seen Pudgy Penguins doing its numbers, right? And something that's very important here that all these projects have in common, you can see here on the %R trend exhaustion, they're all almost overbought on the daily chart for the %R trend exhaustion. This is coming back down to here, but then it's probably going to do another push. So I think we do have some more push to go upwards, right? I think we're actually going to get trapped. Like, I think they're trying to trap the bears, and then they're probably going to also trap the bulls after they've trapped the bears. And what I mean by that, if you come over here and you look at the total 3 market cap, this is called the total 3 because this is the whole entire crypto market cap, excluding Bitcoin, Ethereum, and stable coins, right? This is all crypto, excluding Bitcoin, Ethereum, and stable coins. So this is the most pure way of looking at altcoins in general. You can get Ethereum out the way, you can get Bitcoin out the way, you can get those stable coins out the way, right? But what we're seeing here on this total 3 chart is actually a bear flag. So we do have a bear flag right here. And as you can see, bear flags are bearish signals. They're bearish signals. Now, you're probably asking, well, if we're in a bear flag, how are we gonna get bear trapped, right? Well, they have ways of trapping the bears. And right now we're at $749 billion in market cap for all altcoins, excluding Bitcoin, Ethereum, stablecoins. You already know the criteria. We are at 749.884 billion, right? So what we want to look at is how much more billions would it be if we came up here to the top of our bear flag, right? Because if we do that, that's going to be around $780 billion in market cap. So about 785 billion actually, because it's going to be around this time, 17th of May, somewhere around there by the time it hits it, if it hits it, right? So that's about $785 billion in market cap. Think of that. Think of how much money that's going to be. Right now we're at 749 billion. And just to think of that, we can go all the way up to 785 billion. That's still going to show that we're pumping in the altcoin market. So as of right now, yes, altcoins are doing extremely well. We went from 720 billion in market cap in the altcoin markets all the way up to 767 billion. And now we might even be pushing up to 785, even though we've pulled back to 749 billion. And the reason why I say I think that we might push up here to the top of this, because for one, it's a bear flag. So let's say we do push up there, doesn't stop us from dumping from there. Also doesn't stop us from breaking past it. But there's a few things that you want to pay attention to and watch out for here. I think we are going to get to the top of this bear flag. But something that you really have to pay attention to is the 200-day moving average. So this white line here is the 200-day moving average, and the red line down here is the 50-day simple moving average, right? We have the 50-day SMA, and then we have the 200-day moving average, right? So again, white line, 200-day, red line, 50-day. So the reason why this is important, because as we push up here to the top of this, we're probably going to retest this, right? So we're probably going to very briefly break out of this bear flag, and then we will be literally trapping the bears, because the bears are going to get trapped because we're about to push up massively. We might even see 800 billion. That's actually a solid support base. And as you can see here, solid support. It was very solid support multiple times for us. So I think that's a solid support base for us. That's the last solid support that we've had inside of the total 3 for all the altcoins. So the reason why this is important, again, if we push out to here to $800 billion market cap, that's 50 billion extra dollars injected into the market. Let me say that again. That's 50 billion dollars injected into the market. Look, I still believe we are inside of a bear market. I still believe we're in a bear market, and I think that we're going to have a dump, and I think we're going to have a crash. But I think when we hit this 200-day simple moving average, or this 200-day moving average around 800 billion in the total 3, I think we're going to get a big pullback after that, right? I think we're going to get a big pullback. It's going to be a wake up call. A lot of things are going to crash. Not everything is going to crash hard. It's not going to be hard. It's probably just going to be a little bit of a crash. And maybe we come back down here to this Fibonacci at 630 billion inside of total crypto market cap for all altcoins, right? And that's the next Fibonacci down there. So yes, I do think that we're going to get rejected at the 200-day moving average. But just because I think it doesn't mean that it's not necessarily going to do it. Look, there's a possibility that it could break past that 200-day moving average. So at this point, we're just seeing mass manipulation all throughout all of markets right now. And we're going to talk about the manipulation actually with some Trump insiders, but they actually lost some money on here. So we're going to talk about that in a second here. But yeah, there's a lot of manipulation here. So, hey, it could pass that moving average. But I do believe that once we hit that level, we're going to get a pullback back down to the 50-day SMA. So again, if we push up here to 800 billion, our simple moving, our 200-day moving average is going to meet us here at 800 billion market cap. And then we're going to have the 50-day simple moving average probably going to be around here at this point, around like 740, which is the next Fibonacci. So it would make sense around $740 billion inside of total crypto market cap. So I think that's probably what might end up happening. We might do that rejection. Now, the percent R trend exhaustion. Whenever we see the white line, the short term far exceed the blue line, the long term trend, we see a big pullback in the price. For instance, we pulled back here. So what do you probably think happened there? A little bit of a pullback. So the same thing could stand true if we did it again, right? So if this comes down again, the same thing may stand true where we come up here, tap this, and then pull back, right? Or we don't even go all the way up there and tap it, and we just tap this right here at 782, right? Let's say that the moving average ends up being like right around here, and we tap it right there. That's possible too. So that's pretty much what I'm looking at here when it comes to the percent R trend exhaustion. And then also we have this. So I already explained why this right here isn't bullish divergence, and I'll re-explain it for this video because I know I explained it on another one. But as you can see, bullish divergence is higher lows on the MACD, but simultaneously getting lower lows on the charts with the candlesticks, right? As you can see on here on the right side, higher lows on the MACD, lower lows on the candlesticks. When you come over here and you look at this, yes, we passed this, higher lows on the MACD. All right, cool. We got higher lows on the MACD. But do we have lower lows on the candlesticks? No, we don't. We actually have higher lows on the candlesticks. That's because that's not bullish divergence, right? It didn't pass the criteria to be bullish divergence. But what does pass the criteria to be divergence? If you look at the MACD, look for lower highs on the MACD, and then look for higher highs on the chart. Right here on the left side, lower highs on the MACD, higher highs on the chart. So when we pull it back here, we're going to look at the MACD and lower highs on the MACD. Boom, boom. This one as well, boom. And we can even look at this one. So boom, lower highs on the MACD, while what? Having simultaneously higher highs on the chart. So boom, boom, and then this is about to create a higher high. This is probably going to end up coming up here, which that will then be boom, right? And we might even have another boom, right? If it comes up even higher, we can have another boom at 800. But by that time, bearish divergence has taken over. You're not going to see the next push being as big as the others. And then that's when you start seeing the sell off. So I think that is what we're building up for right here. Now, there's a possibility that I'm wrong, right? I can always be wrong. Anybody can be wrong. And speaking of people that are wrong, now that we kind of went over our technicals, and we're going to come back to this, just to give you guys a break on the technicals, we're going to come back to the 4-hour chart. We're also going to come back on the weekly chart. But what I want to show you guys is manipulation, because I told you guys I was going to talk about this. Unreal, the Trump insider with a perfect 100% win rate just got blown up for $130 million. Remember, I talked about this the other day. I talked about how there was a Trump insider that just so happened to buy shorts right as everything was about to pull back. But things didn't really pull back because market manipulation goes beyond one billionaire. Market manipulation goes to all the billionaires. They're all manipulating the market. And some billionaires might not be in the know. They're like, oh no, all the other billionaires are pushing for longs and I just pushed for shorts. All right, it's just 130 million. I'll go ahead and make another billion tomorrow. That's kind of how it is. So the Trump insider with a perfect 100% win rate just got blown up for $130 million, 16 wins in a row, $125 million in profit, one all in short, and it's all gone. Crypto is a wild space. So yeah, and it's actually true. Like if you look at it, you look at the dashboard here, you see all the proof. I mean, it's just absolutely crazy. That is just absolutely crazy. But it is what it is. But anyways, moving on from this, we can go ahead and talk about the 4-hour chart and the weekly chart. So first, we'll talk about the 4-hour. This is going to be a little bit more short term. And like I mentioned before with the short-term chart, you can see we have the SM or the 200-day moving average coming down here, and then we have the price pushing up. We are overbought on our % training exhaustion, but we can stay overbought for a little bit longer than expected. Sometimes it does that, sometimes it does not. Didn't do it the last couple times, but it didn't do it here, and it kind of did it here, definitely did it right back here. So it doesn't have to immediately dump when it's overbought, so just remember that, but it looks like it is right now. It is going down, but it could stop halfway and then continue back up. It has done it a lot of times before, and we would definitely be smart to be careful about that. And then on top of that, we can also look at our MACD. We should be getting some selling pressure coming in. You can see here on the 4-hour chart, we have the MACD switching over to all that selling pressure right there. So this is selling pressure. It's going down, but I can, I'm not going to say I can bet, but I would definitely believe that the selling isn't going to be as big. And then we're just going to see more buying coming in. But what's going to happen? We're going to create bearish divergence. We're going to create bearish divergence. So I'm going to show you guys something right here. I'm going to show you guys exactly what I'm talking about. Lower highs on the MACD, higher highs on the charts. That's why I love the MACD. I always use it. Even whenever I'm day trading, I use the MACD. But yes, bearish divergence, that's where we're creating lower highs on the MACD, higher highs on the chart. Even when you look at it on the 4-hour chart, you know it's how it's going to happen. Like, let me take all this off so then it can look a little bit more neat. We're going to see this pulling back. It's not going to be as much selling, boom. And then we're going to see that buying coming in. Buying's not going to be as big as the other one, but the price is going to go up higher. Why? Because we're building bearish divergence. And then the next one is going to be some selling off here. It's going to be more than the last time. And then you're going to see less buying than the last time, but it's still going to go up higher. And then after you create those new higher highs around this area, boom, then you get the sell off. So that is my working theory right now. And anybody can be wrong. Any one of us can be wrong, but I'm gonna stand on what I think is going on here. And this is exactly what I think is going on inside the altcoin market. So yes, I do believe we're going up. This is a mini altcoin season. This is a mini altcoin season. It's not complete, but it's a mini altcoin season. We might be running up to $800 billion market cap here in the altcoin market, the total three, excluding Bitcoin, Ethereum, and stable coins. We might be running up to 800 billion. We're at 750 billion. So the fact that might happen, and first of all, since we're on the 4-hour chart, I know I'm getting sidetracked. We're coming down here possibly to this support at 736 billion market cap. I just noticed it as it was going down. And then we have the 50-day SMA right here. So then it'll meet us right there, and it'll probably take us up even higher. So we'll wait for that to happen. And then let's go over here to the weekly chart as well. That's going to be the last chart that we're going to look at here. And on the weekly chart, you're seeing on the % trend exhaustion, we are literally curving upwards. So you're seeing buying pressure coming in for the long-term trend and the short-term trend. long-term trend being the blue line, short-term trend being the white line. We are coming up here, but what I see oftentimes is the intersection here that continues to pull the price back down. That's what happened last bear market, and that's kind of why I'm sticking to it, because this happened last bear market in 2022. This happened like literally right here. This is exactly where it happened, and it looks exactly like what's going on now. So I think we're going to have an intersection here on the percent R trend exhaustion. It might actually go higher than what it did before, so we might see a decent push upwards. But after that, I think we're going to have that pullback. So be very, very careful on that. And this is the weekly chart. This is the long-term chart. So what would that look like? It just looks like exactly what we're seeing, right? A push up here. The 200-day moving average is right here. If we break past that, we do have the 50-day on the weekly chart. So the 50-day on the weekly chart says, nah, we don't stop at 800 billion. We stop at 850 billion, somewhere around there, 850, 860, because it's going to be around there by the time it happens, or if it happens, right? Because as you see the red line here, that's the 50-day SMA for the weekly chart. So if we do push past that 800 billion mark, look around like 880, 875, and then I think a rejection from there would be logical. But I don't think that we're going to push that hard. But if we do, I'm all for it, right? I'm going to definitely get in on it. Now, speaking on divergence, this is the buildup of bullish divergence. See, now we're on the long-term chart. We just had bearish divergence, right? And then we go into bullish divergence. And I'm going to show you guys exactly what I mean here. And first of all, what is this? This is a bearish double top. Boom, boom. Bearish double top that confirmed our bear market. And you can see here, bearish double top is an actual signal, actual pattern. And not only that, we also have this trend line here that we have been respecting since 2023 of October 2023. And we were respecting that all the way up until here, broke down below it, tried to break back above it, got rejected at the trend line. And we also simultaneously got rejected at the 50-day simple moving average right there, which is exactly why I think if we pass the 200-day, we're going to get rejected at the 50-day right here. And then we'll continue downwards. So this is still bearish, bearish, bearish. And like I was saying before, did not forget the bearish divergence. If you look at this, we have higher highs on our charts, boom, boom, while simultaneously having lower highs on our MACD, boom, boom. And then we're creating the third lower high right there. And if you also think about it from that perspective, and I'll go ahead and bring this up, boom, we got bearish divergence. What did we just come out of? What did we just come out of? Why are we going up? If you look at the bullish divergence here, or what are we actually creating? Why are we going up? What are we creating? What are we in the process of creating? And why we are going up? We are in the process of now creating bullish divergence. Boom. Higher low on the MACD, higher low on the MACD, while simultaneously creating lower lows. That's why this next push is going to be another lower low. This is how the divergence works. If you know how much time is ahead of the divergence chart, you can be a master at trading the divergence pattern. And what I'm talking about here with the MACD and bullish and bearish divergence, as you can see, we're still benefiting off of our other divergence, right? So let me bring this up. This is funny how it happens. Like we're still benefiting from bearish divergence, but it's still bearish divergence. What I mean by that is we're getting higher highs because we're setting up for the crash. We're setting up for the drop, right? Bullish divergence is the opposite. You're getting lower lows because you're setting up for the breakout. You're getting lower lows because you're setting up for the pump, right? So the reason why I'm explaining this right now is because if you look at this, you look how we just had bullish divergence, like just look at how it's going down, or we just had bearish divergence because we were setting up for the drop. We were setting up for the drop since 2024. We were setting up for the drop literally since December of 2024. We were setting up for this bear market. Then it goes down because now the divergence starts. And then the next area that would have told you, oh yeah, this is definitely bearish divergence, would have been September of 2025, right? September/October of 2025. You would have known somewhere August, July, the whole time this was being created on the MACD, you would have seen that. And then as it starts to sell off, you're like, okay, we're setting up. And now we have the last push up on our divergence, right? We have the last push up on our bearish divergence, right? And since we're doing that, we are now in the process of setting up bullish divergence, right? You're seeing higher highs on the MACD, lower lows on the chart. So as you can see here, I pull it up. Higher lows, I mean on the MACD. I knew I was saying something wrong. That's why I paused there. Higher lows on the MACD while getting lower lows on the charts, right? So as you can see, the lows are getting higher on this MACD, and on the charts is going to get lower, which is exactly why I'm like, look, we got one more rejection to go. Y'all just got to survive. Y'all just got to survive. I think we're going to get rejected up here, but I'm not 100% sure on the level, right? We might get rejected right here at this bear flag level, right at the top of it. We might get rejected at this $800 billion support, $800 billion market cap support, which is going to be at the same level as the 200-day moving average. Or we can get rejected around $840 to $880 billion market cap at the 50-day simple moving average. So we got a few areas where we can get rejected at, but ultimately we're still bearish. Like, we're still bearish. We're only at the beginning stage of building bullish divergence. And what did I just say back here? We literally took from 2024. Think about that. From December of, well, it was December. So let's say the beginning of 2025 till the end of 2025 to confirm it was bearish, right? If it took us almost a whole year to confirm it's bearish, what makes you think that we can confirm it's bullish yet? Because it hasn't been almost a whole year. It's only been since October. That's why I keep telling people October, just wait till August, September, October of this year. We're going to start seeing some good stuff. This is a temporary not meme coin season. This is a temporary altcoin season. It's a temporary altcoin season. We're going to see that pullback. I'm going to do a Bitcoin video on a separate video because I know this video is getting long. So we're going to cover Bitcoin. Bitcoin might have a nice push coming up, but I would be extremely careful on Bitcoin because Bitcoin is doing the same thing, building bullish divergence. But this is about to go bearish. And once you see this go bearish, you're going to see that push. That push is going to be lower than what Bitcoin's at now. So you're going to want to be extremely careful on Bitcoin. Altcoins are going to do decent right now, right? But let the altcoins run and just find an altcoin that hasn't ran yet. I've been seeing people talk about Doge. I don't know how much I want to say Doge could do good, but Doge has been down for so long. Like, the altcoin market is itching to push something like this. So I would say Doge. You definitely want to look at Doge. The altcoin market is itching for it. People haven't pushed it in a while. If it goes up to 60 billion again, I mean, you could be looking at easy 5x, easy 4 to 5x. I don't know. Hopefully Doge can pump, but we'll see if it does. That's just one of the things that I wanted to look at. Also, we can go ahead and skip all the trending coins because, we kind of already talked about that. You already seen the crypto bubbles. Everything's going off. Our fear greed index is at 48, so we're neutral there with that. And then there are a few things that some people mentioned that I wanted to talk about. This guy says, Bitcoin update, careful. You can call me crazy if you want, but please read this entire post. A few weeks before Bitcoin dropped to 70K, many people called to open long positions. And Bitcoin then dropped another 15% to liquidate all long positions. Currently, many people are calling to short Bitcoin. I think Bitcoin will pump another 15% to liquidate all short positions. In this market, going against the crowd significantly increases your chances of winning. Bitcoin is likely to reach 91 to 92K soon. I think there is some merit to that, I think, but a lot of people are switching bullish right now, and the masses is now switching bullish. Like, so now if the masses is bullish, I don't think I'm comfortable enough going bullish on Bitcoin. I ain't gonna lie. Bitcoin is getting rejected right now. Right? This is the 200-day. Let's go back to the daily chart. We're looking at Bitcoin now. Bitcoin is getting rejected at the 200-day moving average. All right. If Bitcoin continues to get rejected at the 200-day moving average, we might not see a big pump in Bitcoin. Also, another thing, remember what I just mentioned here. Boom, boom, boom. What do you see when you look at Bitcoin, right? This isn't the total 3. This is a different chart we're looking at. This is Bitcoin. What do you see there? You see lower highs on that, and then you see higher highs here on the charts. You're entering the end of bullish divergence. This is the end of bullish divergence. We were already bullish. We already had our bullish divergence, We're literally at the end of our bullish divergence. We created our higher highs. This is all that we could push on Bitcoin. This is just how I see it. This is all that we could push on Bitcoin. And when you look at the MACD is telling you exactly it has nothing left to push. Look right here. The MACD has nothing left. It's already about to switch to selling pressure. It just switched to bullish pressure. It just switched to buying pressure. And it's already starting to switch to selling pressure. That tells you the MACD does not have much more strength left to go. That means that the charts don't have much more left to push. So I think Bitcoin is going to go down right now, but I think the altcoin market is pushing. The altcoin market is going to push. We're going to see some altcoins pushing, but I think Bitcoin's going to end up pulling back right now. And a lot of people in the comments have been talking about the Bitcoin and altcoin how Bitcoin and altcoins are like following Bitcoin. What am I saying, right? The altcoins are following Bitcoin, right? And a lot of people in the comment sections have been pretty much been talking about how altcoins are no longer going to follow Bitcoin. So this could be something that we're actually going towards, where altcoins are creating their own path. But I don't think all of them will create their own path, and they won't have their own path for the whole time of the bear market. They're going to have their path for a certain period of time, but they got to get back on the Bitcoin path for a little bit, and then they can get off it for a little bit, but they got to go back, right? Because when Bitcoin drops, fundamentally everything else is going to drop. When it goes up, fundamentally everything else is going to go up. But occasionally, times like this are going to happen, and we're going to have these mini altcoin seasons. So that's exactly what's happening here. And I don't disagree with this guy at all. I don't disagree with him, but I do think technically we shouldn't be going up. If we pump, and let's go back to Bitcoin, I'm going to be completely honest here. If Bitcoin pumps past this 200-day moving average at 84K, that is pure manipulation. There's no more strength left in the market. The market is telling you right here, we're switching to selling pressure. We can't do it anymore. Mayday, mayday. Back here, the market was telling you we can't sell off no more. We're switching to buying pressure. Mayday, mayday. It's going up. So as our bearish divergence was walking out the door, or as our bullish divergence was walking out the door, our bearish divergence started to come in, right? That's how you got to look at it. And yeah, if that breaks past that level, it's pure manipulation. There's no strength left in the market right here. It's pushed, it's overbought. Give it up, right? But now, what I will say is we are getting closer to that overbought level on the percent art trending option, but we're not quite there. So that's why I say I agree with him, and we possibly could do that. Like something like this could possibly happen, and then you could see it running up even longer. But technically, when you look at the MACD, it does not agree. It does not agree, especially how hard we're getting rejected right here. I don't know. I'll be surprised if Bitcoin does it, but we'll see. All right. And then we got another post here. It says bears should not read this post or they'll be depressed. And see how a lot of people's words, they're starting to sound more bullish now. You got to be careful. It says in the past 3 cycles, Bitcoin has always followed a similar bottom pattern. Whenever the weekly RSI has reclaimed 50 after dropping below 30, Bitcoin bottomed has been confirmed. Just now, Bitcoin's weekly RSI is back above 50 after dropping below 30 in February 2026. If history repeats, Bitcoin won't touch the 60K level ever. So, this is what he's saying. And he's saying, look, you can see the RSI down here on the bottom. The RSI has bottomed out. Now it's going to recover from here. So, it did do that the last few times. I got to give it to him with that. So if he's right, Bitcoin could see another push higher. So we'll see if it does do that. But again, technically, we shouldn't really be pushing right now. This person says, when the RSI flipped in 2018 and 2020, did it change how you traded, or did knowing the signal make you hold tighter than you should have? So that's a good question. But anyways, this guy says it's untrue. It happened in August 2022. Bottom was in October. This could very well be a similar situation. And this is why I'm saying like October. I keep saying October because we entered the bear market inside of October. And I can bring up this other chart for this. We entered the bear market in October of 2025, right? That is when we entered the bear market. Bear markets last 365 days. Don't ask me how I came up with this. Just know I came up with this, right? And actually, you can ask me how I came up with it because I'm going to show you how. Anyways, but we're going to take this. This is a date and time range to show you from the time the bear market started, which was at the top, to the time the bull market started, which is the complete bottom, which is down here, 364 days, which is pretty much a year, 365 days. So if it takes 1 year to bottom out in 2022, we also see the same thing that happened back here. And it's not quite the same back here. I've already done it. So I'm just gonna tell you right now, it's not quite the same, but it is an interesting coincidence, right? It was a little bit longer this time. It was a little bit longer to the complete bottom down here. Actually, no, I think it was closer to 365. It was almost 365. So this was the bottom. 364. Oh, well, look at that. Actually, I thought it was a little bit longer, but it wasn't. So 364 days. And you can see that's the last red candlestick of the bear market. So if in 2018 we had the same massive dump from all of 2018, it was 364 days, around 83%. And then we have it again over here in 2022, where it's also 77%. It's 364 days. So what I did before, I was like, well, what's 83 minus 77, right? And yes, I'm gonna pull up my calculator for this, right? 83 minus 77 is 6. So if we're changing by 6% every single time, hypothetically speaking, then we are getting 71% drop total on this one. That's how I came up with the 28K narrative for Bitcoin dropping. It was somewhere around 28K, so don't mark me on that. But we're gonna take it from this top candlestick all the way down 364 days. So we don't have that much time to go until the bottom of this market, around 71%. And 364, 71%. That'll bring us to, give or take, that brings us to 35.9K. So around 35K. All right. As the bottom. That's 364 days, 71%. So if my calculations are right, then we are going to be seeing a pullback here. That's why I said, look, as we go up, we're trapping the bears. Remember what I said at the beginning of the video. As we go up, we're trapping the bears. As we get rejected at this moving average that we're getting rejected at now, we're then trapping the bulls. Now, if we go up to the 50-day up here, the 50-day moving average to like 95K, then we're trapping bears some more, and then we're going to trap the bulls super hard. Either way, both are getting trapped. Both. All right. So yeah, that's what I got for that. And this is pretty much all I got for you guys today. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Definitely check out the link in the description for Chart Prime, best automated trading indicators in the game. Check out the link in the description for Avantis, best DeFi trading platform in the game. And you can go ahead and do 500x leverage, up to 500x leverage. Get those discounts on your fee, and sign up through the link in the description, and you'll get some discounts. All right. So that's what I got to talk about now, and this is pretty much all I got. Let me know in the comment section, guys, what you want me to cover next. If you want me to cover something specific, become a member of the channel. If not, I'll eventually get around to doing the video. All right. As always, I'll be back with another video.